When you hold a US dollar in your hand, it looks simple. A piece of paper, some symbols, a famous building, a number. But behind that small note is a very long story about war, trust, gold, politics, and power. The dollar was not born strong. It was built, broken, and rebuilt many times before it became the center of the global financial system. To understand how the dollar was created, you have to go back to a time when it did not exist at all. Before there was a United States, the colonies in North America used a wild mix of money: British coins, Spanish silver, Dutch currency, homemade paper notes, and even tobacco or furs. There was no single stable unit of value. Trade was messy, and trust was low. When the colonies fought for independence, they needed money to pay soldiers and buy supplies. They printed a new kind of paper money called continentals. At first, this seemed like an easy solution. Print paper, solve problems. But there was a catch. The more they printed, the less each note was worth. Inflation exploded. People started saying that something was not worth a continental. It was an early lesson that paper money without control can quickly become almost worthless. After the revolution, the new country needed a serious money system. The leaders wanted a single national currency that could be trusted by merchants at home and lenders abroad. They did not want to repeat the chaos of the colonial period. So in the late 18th century, the U.S. government passed a law that officially created the dollar as the basic unit of money. At that time, the idea of a dollar was not just paper or a number in a computer. It was defined by metal, a certain weight of silver, and later also gold. The government created a mint to strike coins. Gold coins, silver coins, and copper coins became the physical form of this new dollar system. The value came from the metal itself and from the government's promise about the weight and purity. In the early years, the U.S. also allowed private banks to issue their own paper notes. Those notes were supposed to be backed by gold or silver held in the bank's vault. In theory, you could take a paper note to the bank and trade it for metal. In practice, many banks issued more notes than they could support. When people got scared and all tried to redeem their notes at the same time, panics and bank failures followed. Throughout the 19th century, the United States experimented with different banking systems. Sometimes the country had a central bank. Sometimes it did not. Sometimes there were many small local banks issuing their own dollars, all slightly different in trustworthiness and value. This period taught a second big lesson. Money is not only about metal, it is also about institutions, laws, and confidence. The Civil War pushed the dollar into a new phase. The government needed enormous sums of money, fast. It began issuing a new type of paper currency called greenbacks. These notes were declared legal tender for most debts, even though they were not fully backed by gold at the time. People were forced by law to accept them. After the war, there was a long argument about whether these paper dollars should be tied back to gold. Eventually, the U.S. moved toward a gold standard, promising that dollars could be exchanged for a fixed amount of gold. Under the gold standard, the dollar's value was anchored to a specific quantity of this metal. In theory, this created discipline. The government could not print unlimited money without having enough gold. In practice, this system also created tensions. If the economy grew faster than the gold supply, money could become tight and painful recessions could follow. But for a time, the gold-backed dollar became increasingly respected in world trade. Still, the U.S. financial system had a big weakness. Panics and bank runs kept returning. In 1907, a major crisis nearly collapsed the banking system. This finally pushed politicians and bankers to design a more stable central structure. In 1913, the Federal Reserve was created. The Federal Reserve, often called the Fed, became the central bank of the United States. Its job was to manage the supply of dollars, act as a lender of last resort to banks in trouble, and provide a smoother payment system. From that moment on, the dollar was no longer just coins and notes. It became a managed system, guided by a central institution that could create or destroy money through its actions. Then came the Great Depression in the 1930s. Banks failed, businesses collapsed, and people lined up to withdraw their savings in gold. To stop the bleeding, the government took extraordinary steps. It limited private ownership of gold and changed the official price of gold in dollars. This was a turning point. The link between the dollar and gold was still there, but it became more of a government-controlled relationship, not a simple promise. The Second World War reshaped the global financial map. By the end of the war, much of Europe and Asia was devastated. The United States, with its industrial base intact, held a large share of the world's gold. In 1944, a group of countries met to design a new international monetary system. They created what is now known as the Bretton Woods system. Under Bretton Woods, many countries fixed the value of their currencies to the U.S. dollar, and the U.S. dollar, in turn, was officially linked to gold at a fixed rate. Foreign central banks could exchange dollars for gold if they wanted. This structure effectively made the U.S. dollar the center of the world's money system. To trade internationally, countries needed dollars. To hold reserves, they held dollars. But there was a built-in tension. For the world to have enough dollars for trade and reserves, the United States had to send a lot of dollars overseas. Over time, foreign central banks collected more dollars than there was gold to back them at the promised rate. Some began to demand gold in exchange for their dollars. The pressure grew. The system was slowly breaking. In 1971, the U.S. government made a dramatic move. It announced that it would no longer freely exchange dollars for gold at a fixed price. This decision effectively ended the last direct link between the U.S. dollar and gold. From that moment on, the dollar became a true fiat currency. Fiat means it has value because the government declares it to be legal tender and because people trust that others will accept it. Many people predicted disaster. If the dollar was no longer tied to gold, why would anyone trust it? But something interesting happened. Instead of collapsing, the dollar remained dominant. Why? Because its strength did not come only from metal. It came from the size of the U.S. economy, its military power, its deep financial markets, its political influence, and the habit of using dollars in global trade. A key part of this new phase was the rise of what some call the petrodollar system. Major oil-exporting countries priced their oil in U.S. dollars. If you wanted to buy oil, you needed dollars. This created constant global demand for the currency. Nations earned dollars from exports and often reinvested those dollars into U.S. bonds and financial assets. A loop was created. World trade flowed through the dollar, and those dollars often flowed back into U.S. markets. At home, the dollar kept evolving. Physical cash became only one small part of the total money supply. Bank deposits, credit, electronic transfers, and later digital payment systems expanded the definition of dollars. When you check your balance on a screen, you rarely touch metal or paper. You are looking at numbers inside a system maintained by banks and the central bank. The Federal Reserve gained new tools and responsibilities. It began targeting interest rates to control inflation and unemployment. It created money during crises by buying government bonds and other assets. When the economy slowed or panicked, the Fed could inject liquidity, stabilizing markets and supporting the banking system. This power comes with trade-offs. On the one hand, a flexible fiat system allows rapid response to shocks, like financial crises or pandemics. On the other hand, it opens the door to inflation if money is created faster than real economic output. Trust in the dollar now depends on the belief that U.S. institutions will not abuse this power over the long run. So how was the dollar created? It began as a metal-based unit defined in law. It evolved through chaotic experiments with paper money and banknotes. It gained structure with a central bank. It rose to global dominance through war, economic strength, and agreements that put it at the center of the world system. It cut its last ties with gold and became pure fiat, backed by confidence in the United States itself. Today, the dollar is more than just a national currency. It is the main unit for pricing oil, many raw materials, and a huge percentage of international contracts. Central banks around the world still hold large reserves in dollars. Investors run to the dollar in times of global fear, treating it as a kind of safe harbor. But nothing in money is guaranteed forever. Other currencies and digital assets are competing for a larger role. Some countries want to reduce their dependence on the dollar in order to gain more independence. The future may bring a more multipolar system, with several key currencies sharing power. Yet whatever happens next, understanding how the dollar was created teaches an important lesson. Money is not just paper, metal, or code. It is a story that people believe together. A story about value, power, stability, and trust. For the US dollar, that story has been strong enough to survive war, crisis, and massive change. The question for the coming decades is simple but profound. Will the institutions and behavior behind the dollar continue to justify the world's trust? If they do, the dollar will remain at the heart of global finance. If they do not, the same forces that once lifted it up could slowly push it down. For now, every time you see a green note or a digital balance in dollars, you are looking at the result of more than 2 centuries of decisions. Some wise, some reckless, all combined into the money that quietly shapes daily life on every continent.